Hi, this is Zak Mir from Zak's Traders Cafe with a look at some bulletin board hero stocks on Thursday, the 28th of January. Starting off with Condor Gold, there's been decent progress here following the break of the 50-day moving average at 25.5 pence earlier in the week. The view at the moment is that while there's no end of day close back below the initial December support at 33 pence, the shares could still head up as high as 50 pence plus, which would be the top of this wide rising October price channel. In the meantime, any weakness towards 33 pence, regarded as a buying opportunity in the first instance to cool off the overbought RSI around the 79 level. Next up is a stock which previously we've been hoping would do well. Eurasia Mining obviously had the big spike in the summer. What's happening at the moment, though, is that shares are making a decent attempt at breaking back to the upside, probably in a rising trend channel, which one can draw from the summer, heading towards around 1.3, 1.2, 1.3 pence. Draw the channel running level with the 50-day moving average at 0.54 pence. And while we hold above that, that is where the shares could head, 1.25 pence or so. Decent end of day close above the 200-day moving average at 0.71 pence would be a buy trigger for those who are cautious of the shares. Next up is Oracle Coalfields. There's been a decent rebound, possibly along with the rest of the mining sector, but shares very good bounce just above the 200-day moving average at 1.82 pence. So they've just cleared the 50-day moving average at 2.36 pence. At least while they hold the 50-day line, we're looking for a target back up towards the top of the 2015 range, as high as 3.25 pence over the next 2 to 4 weeks. RSI just at 61, so not overbought rather, even after the latest strength, and looking very encouraging indeed, given the way that we've held the 200-day line since September. UK oil and gas is next, and although it's still a bit of a waiting game, at least on the technical front, we've still got the aftermath of this wedge breakout, at least while we're above the 50-day moving average at 1.25 pence. The shares could head back towards the 200-day moving average at 1.74 pence. That would be a modest target, obviously. Any decent news could mean that the shares do a lot better. Good RSI support as well, multiple rebounds off the neutral 50 level to leave at 56, so that's a leading indicator on possible upside. Stop loss back below 1.1 pence, which was the low in December. Going on to W Resources, where we had a decent autumn here for the shares. Waiting to see how we get through first part of 2016. Rising trend channel from August. Reasonable support both at the summer or the 2015 uptrend line, 0.5 pence, and ideally there's no end of day close back below the 50-day moving average at 0.57 pence. If we can get through the rest of the week, maybe early next week, without the 50-day line being broken, it should be back to the range highs here at 0.9 pence plus over the next month or so. Finishing off with Extract Resources, where we're still trying to get this stock to give us a sustained move above 0.2 pence. We are in a rising trend channel, which has its floor just below the 50-day moving average at 0.19 pence, so that is a double support area and a helpful thing. While there's no weekly close back below, let's say 0.17 pence, which is the January intraday floor, 0.35 to 0.4 pence is the target. If you're cautious on the share, you want to see either a weekly close above the 200-day moving average of 0.25 pence, or even a higher low above that feature. That's it for me. More updates at the same time tomorrow.